Hey guys, this is Simon with Trade and Perform Coaching. Wanted to do a video on stop outs. What are they? How do you use them to day trade? And why are they so important? So let's jump into it. If you need to contact me for any reason, you can reach me at Trade and Perform, TradenPerform at gmail.com. If you would like a pass to the room, if for a 3-day trial, or you would like to join, or you just have a general question, that is where you email me. So I'm going to start at a very basic space, which is prior days highs and lows, and we're going to look at a couple of different charts. So first of all, what I'm going to do, this is a profile chart. Don't get intimidated about it. Each area is worth 30 minutes, right? So I'm just going to break this down, and I'm going to have them all broken down into their own columns, and we are looking at NQ to start with. Right? So what you will find from the prior day's highs and lows is what we are looking for is that generally we will get up. So remember, this is basic concept. This is not, oh, it's above a prior day's high, I short, or oh, it's below a prior day's low, I go long, right? But they're key areas, right? And they're key to understand why they're so important. So we're going to break these areas out. And then each of these bars within here is a 30-minute bar. But I want you to remember the same concept applies to 5-minute, 10-minute, 15-minute, 30-minute, 1 hour, 2 hour, 4 hour, 8 hour, and higher time frames, weekly as well, right? They're all key areas. So here's why they are important. Okay, the why is really important. They're important because let's say someone came in here and shorted right here and it rolled down. They had a decent profit at the end of the day, right? It went from roughly 16,360 to 16,287. That's about $1,200 a contract on it if we're trading the NASDAQ, right? The NASDAQ 100 futures. So when you look at that, you go, oh, well, where's the person going to naturally place that trade? Where's the trader going to place their trade? And they're going to put it right above the high, maybe a tick or two. But they say if they get behind here, right, they are going to take my stops. Now, you will see a lot of guys out there go into this really detailed, how many contracts get taken? Is it out of value or in value? How does this all, how does this all work? But you're going to don't worry about that right now. Don't worry about how you can tell if it's going to turn or not turn. Just generally know there's stops there, right? So the day time frame is really important. Now, when I say day time frame, I mean US session from pit session open to pit session closed. That's what I'm that is what I am looking for. That is what I am interested in. That's where the biggest stops come from. So I know when I get above here, right? For example, on Friday, which I was on vacation, so I did not trade, but I get above and it rolls down. Now, this happens more in a market that's in balance than in a market that's not in balance, right? Number one. Second rule, second rule that's important is that it's preferable that it trade within the range, right? Poke its head above on the day time frame. These are rules for the day time frame. Poke its head above and then set up to come back in, right? Versus when it simply gaps above. If it gaps above, you generally want to wait for another setup. We don't trade the first half hour, so when it open drives higher like this, it's really not an issue for us. But when you're trading above, when you come to the US session, right, you got to pretend like the overnight session didn't exist, right? And you see it gap above, wait and go ahead. I want to see if it trades back in first or not before I start looking for a continuation trade. And if it doesn't trade back in, right, we gap up and we hold the first hour. Dalton would say, which is Mind Over Markets, would say expect a trend day up, which is exactly what happens in this situation. Now, when we look at the other end of the extreme, you can see right now NASDAQ has been doing what's called one timing up, right? You generally shorts within a one timing scenario are much, much harder to make shorts work. However, you will see it upon careful examination, right? And I can tell you, we have not been shorting the NASDAQ the last 2 weeks, but you can still see that if you were going to short it, the best place to short it through all of this was clearly above the prior day's high, right? Shorting prior to getting above that prior day's high really cost you some pain. You can see it takes a little dip there, but if you shorted any earlier, it really cleans your clock, right? Again, that is why I hunt shorts, right? Or hunt longs above or below a prior day's high or low. You can see here in this case, we opened up below the prior day's low, and we swung all the way through the range. And so I talk about in the room levels of aggressiveness, right? So the least aggressive day trader will look for shorts above and below these prior days, highs and lows, right? Very simple. That's where exhaustion comes from. And you can see sometimes the rolls are quite dramatic. So when I say I'm looking for a stopped out buyer or stopped out seller on the day time frame, that means I want to get above or below. Now, here's the challenge. Yes, does it create a great trade? Does it create a great trade for us when we get to these levels? Absolutely. It creates monster trades for us. But when you're in trend up, right, you can see so the frustration comes, right, as a day trader. If you can look through here, we had some great trades when we were looking for longs, because you can see in this little series in early October, right, we would trade underneath the prior day's low and find longs, right? Gap down below prior day's lows, find longs, right? Get down below prior day's lows, find long opportunities. And you'd see it over and over and over again. Right here, you can see we would trade below the prior day's low. And some of these trades were quite monster, and this trade was working fantastically. But all of a sudden, we started this just pretty powerful, frankly, rip to the upside, right? So what's the challenge here, right? So the first challenge is this is a great way to find a trade. That's not the challenging part. That's actually the good news. It's a great way to find a trade. But when you're looking for a trade to the long side, like everyone has known, the NASDAQ has been bullish. And what's the problem during the US session? It's particularly in the last week, right? You can see this is going back to outside of Friday, but we had Thursday, Wednesday, Tuesday, and Monday. All week, we were unable to trade below a prior session low to get the long. So what do? Well, sometimes you just have to be patient, or you alternate to another market. You look to oil, you look to gold, you look to the S&P, which is kind of mirrors right now the NQ, but it's much stronger. Russell was in balance until last week, had a hard breakout. So number one, this method works the best from a two-sided, hey, I'm looking for trades on either side of this market. It works the best when we are in a balanced market. Okay, so I'm going to give you an example of that. Gold, right? Gold has been in a consistently balancing market. I'm going to erase this. And right now I'm focused. So I think in this video, I will focus only on the day time frame. So it helps people in the hourly time frame. So it helps people understand what I'm looking for. That'll be easier. It'll let me contain it to a relatively short video. And then I can do follow-on videos about stop outs. I think they're so critical to making good trading decisions, right? So on gold, you can see, we've been in balance. See how as I pull the chart in, it's just not going anywhere. It's not going up. It's not going down. It's basically 1821 to 1720 at the extremes. And we're at the top of the range. It's been trading from bottom of the range to top of the range. I like markets like this. So you'll see here, when I block this out, their own columns, and I haven't done something here, so I'm going to do it really quick so I can see this easily, which is okay, and now we'll have all these pretty little easy to spot areas where it's above or below a prior day's high or low. So when we look, so let's just go back in time a little bit to see the examples. And then what we're going to do is we're going to knock this back into our own column. There we go. Now it spreads out a little bit. Wow, that's odd, but okay. It obviously doesn't have the ability to adjust for the contract, so that's fine, no big deal. But there you can see on, we're back in September here, 929, 930. So again, you can see here where from the prior day in the session, so see how we traded inside of balance all day? We trade above the prior day's high. Right now it closed a little bit below. I think pit session close on gold is at 1:30 p.m. If I have that right, I sometimes forget, but I believe it's at 1:30 p.m. And you get above, and then you can see the next day, overnight, we traded down, and it opened lower. Now, if you look, right, so you're going to say, but Simon, we traded underneath this low, this low, this low, and this low. And it didn't turn till all the way down here. I will cover how to identify the turn in very specific terms, how we look for those. I don't want to cover it now because it'll confuse the issue of understanding what we are looking for, right? But the point is, we're looking for a specific setup, and the majority of the time, it doesn't extend like this. Like this was open drive lower, trend day down, and it bounced towards the end of the day, right? So in trend days, you're going to have price discovery where it's going to go and take out a bunch of levels, and that can be driven either by the Fed, obviously in gold, economic data, anything that would move FX, any will move gold as well. And there's really not much exception. I got to say this is probably a Wednesday or a Friday, most likely because it open drive lowered right at 7:30. At the pit session opens at 7:20, right? But you can see most days where it comes back in the following day, it just trades underneath the prior day's low, bounces back in. The following day trades above the prior day's high, trades back in. Even over here where we're looking to the left, right? We gap down, and if we go look all the way back to the left, I'm going to assume, I don't see how far back I have to go. I'm not going to worry about that. That's too far back in terms of pulling up the data. Let's go back down to 9. Right in here. I'm not going to go back and look at the data. This is back into a prior day's point of control. It responds, but you can see again the next day trades underneath the prior day's low and gets a measurable tradable rotation, right? Even from the close, all I'm worried about is, does the rotation happen? That's all I'm thinking about. Does the counter rotation happen where I can get paid? That's what I am most interested in, right? And then you can see again, trend day up where it opens up, and you can see a lot of times that trend day up will start right out of the gate. So I'm going to assume on 9:30 there was some kind of econ. It drove it straight up, and you can see where did it exhaust? Right over a prior day's high. That's where it got exhausted, right? So if it doesn't exhaust here, it stretches all the way up to an old prior day's high, gets above it, trades back in, right? You can see here, some days it has an inside day, doesn't trade above or below, right? But you can see here, we just trade underneath prior day's low, we shoot above, we get above the prior day's high, we trade back in. Okay, so I think I've gotten through the point. Above and below a prior day's high or low is a very important place to look for a trade, right? So that's number one. So the next level I would go to from here, and let's use NQ as the example, and I'm going to go back to my other chart book here real quick. Let's use lots of people like to trade ES. Let's just use ES for a second. This is a 5-minute ES. I'm going to duplicate this chart. I'm just going to actually duplicate it over here so I can, oops, don't like that. Let's see what I've done here. Computer doesn't like something that I've done. Chart. Oh, I know what the problem is. But where is the indication to change the chart? Let's see if I can escape out of this. Let's try this. There we go. Sorry about that. Got hung up on it a little bit. So I can just erase everything when I'm done. Okay. So let's use ES. The next level that I want to go to when I'm looking at a chart, I'm going to redo this here real quick to a 60-minute chart, is the hourly. And I'm going to try to go down in time frame all the way through here. So if I'm looking at a 60-minute chart, right? For example, let's say I wanted to look to go long, and we're trading this evening, just in general principles. So we've been going up, up, up. Well, obviously we've been one timing to the upside, and NQ as well. Let me make sure this is on a 24-hour chart really quick. Okay, so when I'm looking at this, what I want to do, and again, you'll see the difficulty in being able to get long, is I want to get underneath the hourly stops, but I also want to look at it in terms of swing if I'm going to look at a 1 hour chart. What I would like to get underneath is the first thing I look at when I'm looking at these bars is I want to see these big green bars that are nice and long, and particularly if they have a little wick underneath them. I'd like to be able to get underneath those wicks or have extremely long bars come back the other way and get underneath those. Like right now, this evening, I'd look at that and go, geez, I'd really like to get underneath that bar to 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 snag along below 46.7450, right? So again, you need a market that's willing to wipe down, but here's the point behind that. So let's go and look at the last time that it actually went down so we can look for the trade, right? So if I was going to look for a trade, and we can go back to Friday as an example, right? And I'm going to look at this chart. I'm going to say the levels that I'm going to look for. The reason why this is important, as the market is moving up, right? Before I want to get long, I'm going to look at this chart. I'll make this bigger because I know it's hard to see those little the little wicks, right? So obviously, a great deal of the sell-off came mid-morning Friday. I don't know what drove it. Again, I'm on vacation, right? But if I'm trading up here, I'm going to look at this. I'm going to go, hey, I want to be able to at least get underneath here to look for my long. I'm going to kind of mark off levels like this. Now remember, in the room, we're looking for the algo to actually set us up. But all of these are potential stop locations, and preferably underneath these big green bars is where the majority of the stops. So Friday, you can see it was pretty much up, 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 up into 8 a.m. and then we sold down and we just swept the whole range, right? They never really responded underneath the hourly bars. But when you have a two-sided market, so I'm just going to go back just a week, maybe even 2 weeks to give you an example of this, right? Because this is where once you start driving in one direction, you can't get behind the stops, right? So I'm just going to go back just a little ways. And here we'll just, if I recall correctly, we were trading two sides over here, right? So when I'm looking at this chart, right, I'm going to go and look and go, okay, well, let's say I'm looking for a long, right? I'm going to pull this chart in. Need more dates. Let's see what the problem is here. Nope, not 600. Let's take too long to load. That'll be just about right. Okay. So here's a good example, right? If I was looking for a short from 10.4 to 10.5, and I'm looking at the hour, I'm going to go, hey, this was a big sweep down. You've always heard the term go back to the scene of the crime, right? So I'm going to put a line right above this bar. I'm going to put a line in two areas. Above this bar, I'm looking for potential shorts, and then above this bar, I'm looking for potential shorts, right? Conversely, when I'm up here through here, so I make further distinctions, but I'm trying to show what I'm trying to show is how I move my eyes up and down the screen to look for trades, right? So let's say I was looking over here on the 4th or the 2nd. The first thing I'm going to say is, right, the obvious way to say that is, well, look, I'd like this to get taken out, but it doesn't happen, right? So I don't make the stretch all the way down to the low from the 24 hours, right? What we do take out is the low, this low here. So this turned out to be the low of the session, right? If that's 8:30, that was the low of the day. This was obviously the high of the day. So you can see when we're all the way up here, right? And I'm looking, I'm going, well, where's the optimal place to take a trade? Well, it's either going to be here at 42.60 or over here at 42.76, right? But there's other areas, right? If I'm trading up here, right? If I'm trading up here, right? And I'm looking at this hourly bar. I'm going, okay, well, where's the best place for me to take longs? Well, potentially here, here, and here, right? So obviously I need something else to tell me I need something else in that mix to tell me to take a trade. And again, we have that in the room. All this is doing is if I'm up here, I'm going to go, okay, these are the areas I want it to stretch. Obviously, I don't want this one bar to be my marker, right? So what I'm going to do is if I'm trading up here, right, and I'm going, hey, I'd like to find a place to get long. So we're trading roughly 43.70 at that peak, right? So I want to pull back to find a good place to get long, right? So if I look at the bottom, of this bar, I say I'd like to get underneath here. Why? Because someone bought in this hourly time frame, right? It's the same thing if you're looking at profile. It doesn't matter how you look at it. The whole point is somebody bought in that time frame. If somebody bought in this time frame, right, and I'm trading this time frame, I want to wait till I hit the stop. So you can see right when we took out the stops from this low, you can see that it bounced back up. Still, I'm not interested there because it's not of enough rotation back. So you can see just as we approach that we just traded underneath the low of this hourly bar, it counter rotates up here. Then you can see over here, we didn't quite take out the low, right? But it approached that area where I can look for a trade. I'd prefer to get underneath, right? And then set up within the algo. Again, this is very high time frames, right? Conversely, and then you can see we finally rolled back, took out the stops from the beginning of the rally, right? Took out all the stops, and then we start to counter rotate. So where am I going to look for shorts again? If I'm trading down here, so I'm going to erase my lines, right? So I'm in the room and I'm looking for places to short, right? From an hourly standpoint. If I'm looking for places to short and I'm trading, so this is where we're trading, and I'm going, where would I like to short? Okay, so if I'm on this bar, I'm going to go, hey, I'd like to take out the stops from the prior bar. I always want to get out of the hour I'm in and look 1 hour back and take out the stops from that location, not from the current bar that's being built, right? So you can see once we get above, it falls back in. Where do I want to take a long, right? If I'm looking at these hourly bars, these were my last set of buyers. They pushed, right? So I'm always looking for buyers and sellers. If I'm looking for shorts, I'm looking for where the sellers were. If I'm looking for buyers, I'm looking for where the buyers were, and I want to take their stops, right? So this is the location of my last hourly buyer, last green bar I had from an hourly. So I want to take the stops right here. What we do, we come down, we take the stops, and then we bounce back up. So where do I want to look for shorts? So now I come back. I sure hope I'm making sense because it's an important concept here. So when I come back, right, if I'm trading down in this area, I'm going to go, where was my last sellers, right? Well, excuse me, where was my last sellers? Yes, if I'm looking for shorts, right? So when I'm down, really when I'm down here, what I want to do is look backwards and go, okay, this is at least where I want to get to, right? Because I don't want to be in the bar that I'm currently in. If I'm looking here, this is the location I want to get to. So you can see when we get above this area, right? See how the market kind of stalls above here? It just doesn't roll back over, right? So remember, this is my prior stop, my seller, right? This is my seller from on top. We get above them, right? We came down, we established the hourly bar, we got above them, we rolled back down. When we rolled back down, once I'm on this bar, this is my last hourly trader. We get underneath them, we pop back up. Where does it come? Here's my last hourly seller. We get above them, we roll back in. And that process goes over and over again. And then you can see all the way up here from the 10.4, right? See where that hourly seller was? Okay, and this makes a very important point. So I want to pause to make sure I explain it. The reason why this is valuable when you're looking at the hourly charts, okay, when you're looking at the hourly charts or higher time frame, most of the charts that we're trading on in my room are very, very, very tiny time frame charts, right? What this does is opens up and go, hey, there's got to be, what you want to do is just ask a logical question. Where are all the stops sitting, right? Well, anyone who shorted this, right, and said, hey, I've killed it to the downside, right? I'm going to try to push my extensions. Well, you're not going to want it back above that point, right? Anybody in their right mind is going to look at that and go, yeah, that would be a bad idea. That's why you find when it gets above, initially there's purchasing, but then it exhausts and falls back in. So I want to be clear. I am not saying as soon as it gets above that hourly short. What I'm saying, guys, and particularly guys in the room, is once it gets above that hourly area or a daily area, start looking for your setups. Get underneath the buy wave to the high. Guys in the room know what I'm talking about. I'll try to connect this here at the end, right? You're looking for very specific ideas once you're there. We're not guessing that it's just going to exhaust. But again, you'll see here, right? When I see those big hourly bars that look like this, I already know when I see an hourly pairing like this, that I want to get underneath that hourly pairing to look for longs. Why? There has to be stops sitting behind it. It may be a day or two later, but I want to get behind them. By the same token, when I'm down here, right, when I get this hourly bar form, I know what I want is 1 hour back, so I really want the next hourly bar. I really don't want it back to back. Really, it's this bar here, right? There's got to be stops behind that, behind this, right? So why is this all important? This is important because if you're over here going, I'm looking for shorts, let's say it's down here. Even if you're looking at the 1 bar behind and you're down over here looking for a trade, right? You're at least going to go, hey, this is where I'm looking for a potential short. What is that doing for you? It's drawing you from 42.77 to 43.21. Not only that, but let's say you're long from this location for whatever reason, for whatever signal gave you the long, you're long from that location, right? If you're long from this location, it gives you a place to look. I'm going to give you an example of that, right? If I go, again, when I'm over here, up over here, this is where I'm looking for longs. Really, I'm looking for the biggest hourly bars for stops. And I want to show you, say, but Simon, it flushed. It did. But if you look carefully there, I'll make it really big. It did flush. There's no question about it, right? But if you look, before we flushed, it went from 43, roughly 38 to 40, all the way back to 43.52. That's $500 a contract, right? And what this did was gave me, said, hey, if I can get underneath this guy, right? So I start looking for the big bars because I know, hey, that's generally where the stops are to be found, right? Now, same thing here. I'll go and say, hey, stops have to be sitting behind this bar over here, right? And they were. It wasn't exactly to the point, but it was pretty close, right? It went from 43.76, extended up to 43.89, but then it rolled all the way back down, right? So that's how I use the hourly chart, the hourly locations, to look on the chart and go, hey, there should be a good trade here. Like if I was sitting here, if we were sitting at 924, and you go, Simon, where do you think the next responses are going to be? Right? I'm going to go, hey, we should get a response right underneath this bar right here. Right? First time we get underneath that bar, we should get a response. Now, will it be a huge response? I don't know. Right? That part I do not know. I would say the same thing here. If I can get underneath this bar here, so now I need the rest of the pieces to fall in place in order for me to make my money. Right? Just like I would go back over here and go. Well, we started trending up there, but I would start looking like I would have wanted to find a long, like behind here, that bar, like when they're big and prominent, that's where I want to find my stops. Those bars that are huge like this, I want to get just behind them to find the stops. That's why I look for those big prominent bars like this bar. I would say this is an area I'm looking at, and then I'd go and say that bar is pretty prominent as well. So when we get to that 43.24, which I think we do, see, there we go. So see right when we do, so let me erase that again so you can see this. So when we get to this 43.24 right here. So see, so we did trade behind it, right? It went all the way down to 43.04. But if I'm sitting here trading let's say I'm trading here, right? I'm going to look back and go, okay, well, where's my areas? Well, my areas are clearly underneath this, this, and this. So from 43.43 all the way down to 43.22 underneath that. That gives me a 20-point range to look in. Why is that valuable? Well, if I'm trading at 43.80, right? If I'm trading at 43.80 and I go, hey guys, we are starting to look for longs below 43.43, then we're going to go over the process and go, these are where the stops are sitting, pure and simple. Just like if we were sitting here, right? If we were sitting right over here, right? The stops, when I'm looking at that down rotation, so here I'm going to make a little bit of an adjustment, but that's what started the down rotation right there at 44.55. So what I'm going to say to everyone in the room is go, hey, let's look above 44.55 for the next potential short, right? And then as we're coming down on each of these big bars, I'm going to go, let's look for the setup that occurs. So I want under the wave, backside test of the wave. Everyone in the room knows what I'm talking about. So I'm not going to go into that, right? And then finally, there's a next piece that is the same. So I'm going to try to tie it together for my profile guys, right? So for my profile guys, if I look at NQ profile or GC profile, doesn't matter, right? That is the same. That is the same as looking at these 30-minute bars, and you'll know a lot of times, right? When we leave a poor low or almost a double equally low and they come in and they put in that excess, right? That's the same thing. Excess gets put in where stops get taken out. That's what I'd want to connect for you, right? So lows and highs get put in where excess gets taken out, right? So you'll see it all over these charts, right? Where we come in. So see how we have a poor high right over here in this area? We have a bunch of almost equal highs in here. That's a poor high. So see how it comes out and leaves all this buying and then leaves it all behind? That's excess. That's what sellers are looking for. The difference is a lot of people will get really into, well, what does excess look like and how do you find it? Like wherever you see a poor low, right, you'll see almost equal bottoms on 2 time periods, right? They'll come in, they'll put in excess on the bottom. So they attempt to put excess, but then it leaves another poor low. So see how the market keeps repairing itself? It'll go from poor low to poor low, right? It'll take out the poor low, find buyers, pop back in, right? It'll leave a poor high, right? It'll come back and take out the poor high. That's a good high right there. So when it takes out the good high, it comes down and takes out the good low down here on 928, but it leaves a poor low there again. So what's the market going to want to do? Usually it'll come back and take out excess to the low. Okay, so see that right there? See how we have a poor low right here? It's 2 lows that are almost identical, right? So when it comes out and takes out those 2 lows that are almost identical, you get excess and they pop it back up. See how it left it? So then you have these highs. These are pretty bad. These need to be fixed, right? So you can see they put an excess down here. They're going to try and turn it when they leave excess. It's 1 bar there, right? So we come in the next day. See how it lifts up? I had no idea it was going to do that, right? But what does it have to do? Come back and take care of all of this. So it takes care of the excess, right? It just doesn't turn. It doesn't set up to the short side of the trade. So the excess gets put in. Where's the next thing that has to be taken out? This is just a prior day's high, is all it is. There's not a poor high there. It's just a prior day's high. We take out the high. We put in a poor high there, right? And it's generally going to want to come back in and put excess on top of that. Not yet. There you go. You finally took out the poor high, all right? But you left a poor high in place. So you don't know if they're going to come back and take that out and fix it, or they're going to roll down and take care of this 1749. Odds are they're going to take care of the 1749. Comes down. There's your excess on the 1749. See that? So now it left something that needed to be repaired right in that area, right? So now, see I have these poor highs here, 1, 2, 3. You generally need to take out the top of that, or you need to come back up and fix the 1772. I'm just looking where the highs are matched. They're equal basically. So it's going to come up, Okay, see how we had 1, 2, 3 periods with the same high? We came over and we took out the excess on top, right? Now see all these lows? That 1756 needs to be fixed, okay? So it's either going to come back and take care of the 1756, or it's going to take care of the 1771, one of the two. So let me show you how I would do this in real time. So I go, okay, folks, we're trading, and I'm going to use the profile to determine where I'm going to go. So I have a poor high on all these time frames here. I had a poor high here. We took care of it, right? When we fell back in. So now it's the 1756 that needs to be taken care of, or I need excess underneath the 1749, or I need excess underneath, because now I have 3 lows, 1748. It gives me areas to look in to find my trade. Okay, I'm going to knock it over there. Okay, see how I took out the 1755.40, put in a new poor low. So I found responsive buyers underneath. I can move this down. And now I don't have a poor high here. Really, I can take this out. It's just a prior day's high that would have to be taken out. Really, I want that 1751 taken. Okay, I took out the 1771. So see, once I get over 1771, I can start looking for the shorts. They push, and they sweep all the way back through. What has to be taken out? 1751.90. 1751.90 gets taken out. See how they put in the excess there after they took out the poor lows from those 2 periods? So a lot of times when I see guys talking about profile, they make it so complicated, right? But you can use that 30-minute profile, that time frame. It's just a 30-minute bar is all it is. And here's what the deal is. When you have a bunch of bars that are parallel on 2 30-minute periods, it means that you have a poor low or poor high for that area of the chart. That's it. Don't overthink it. Poor area or poor low for that area of the chart. And the market is in general going to want to fix that, right? And you'll see it do it over and over and over again. So see here, you can see we got above the high. So if we just started from here, right, I can already tell you, we left generally a poor high. Now the rule for a poor high or a poor low is that you have 3 bars form in that time frame, and that sets up excess, right? I really want it to be smooth. Like I want it to look like this, where it really clearly got above and below. I don't try to be a perfectionist because the perfection part kills traders. But when I look at this chart from here, right, the first thing I'm going to say is this has to be fixed, right? That high needs to be repaired. And then this needs to be fixed right here. So those would be my 2 prime areas on that chart for that day. It'd be this. This already got fixed, so it's kind of hard to read there. It's pretty sloppy. And I would just go from there. If I can't see it clearly, I just wait, right? Okay, so see there, we took out that, see how we took out the 1782.50? It needed to get repaired, right? Pushed, pushed, pushed. Obviously, that was ended up being a trend day up out of the gate and just held the top. See how we have a poor high here? The next day, we have to take out that high and repair it. We left it with another poor high. And if you'll look here, all of this is kind of poor lows through here, right? So I would say this has to come back in and fix this. And after that, it has to fix this. Those are so I'm setting up the playing fields to look up and down that playing field because I know where it has to go now the following day. So if you look, the following day we just had tight balance. Now look what it did, right? We got below that 1791 area. So when I'm looking over here, this is what I want to fix, that 1757.70. Or, so now the playing field moves. The playing field looks like this. Here, that needs to be fixed. And now this needs to be fixed. and this still needs to be fixed. So I'm looking for that 1757 to get taken out, or the 1777.20. Oh, and by the way, no, it didn't leave a poor low there either. Okay, so see the next day how we came from the 1777, we gapped above it. This fixes this. So now the market has to make a few choices, which is why we now need the setup. It's either going to come up here and clean this up, or it's going to come down and there's two levels here. It would need to either fix this or this. Those are, so now we have 64, 61, and 57 as our areas, right? So this is gone, got cleaned up. That was just a trade over prior day's high, and it created excess that needed to get fixed. I put a little yellow line above it. I'd add a yellow line here and a yellow line here because all of that needs to be fixed. So this gap up cleans up all of this, right? Cleans up this, cleans up this. Now this has been fixed, right? I'm looking for shorts and all of that. And again, you guys in the room will know the process that I'm following to accomplish that. And you got to remember, I'm still looking for that 1778 to be taken out. And I'm also really looking for this to get taken out. That's kind of a sloppy high right there at 1815, right? This leaves a poor low, in my opinion. Poor lows taken. See how the poor low is getting taken out, finds response back up, and then we're still looking for that 1778 to get taken out. So see how they took out this time frame here. They cleaned this up over here to the left, right? Responded back up. Now we came down. We just have a double bottom. They haven't fixed anything one way or the other, right? Same thing here. They just left sloppy poor lows, sloppy poor highs. But now that your chart gets rearranged, you left. This is just a prior day's high that exhausted. This was a double. This is a poor high that needed to be fixed, and also a prior day's high. So see when they're getting that excess up there, they get the excess and they sweep all the way back through the range, right? And you were left with a poor low here at 1798. So all it did was intraday. See when you get those two bars and they're almost equal? Like when you look at two bars intraday, you go, hey, this needs to be fixed. Like I would say this needs to be fixed right here, right? And so you're looking at those areas where it's going to come back and go, hey, we have to repair this stuff. So see underneath, this opens up and it drops straight away, right? So there was excess here. It cleans this up and it cleans this up. See how you clean both these pieces? Here, let me erase this. You're going back and looking and going, this is a poor low and this is a poor low. So what happens? We take out that poor low, right? And then what you'll often see, which is kind of weird, right, is instead of getting excess at that low, it'll leave behind another poor low and turn. In other words, it effectively double bottoms intraday behind those stops, then it turns back up. Where am I looking for something to get repaired? Right up here, somewhere in this area, right? That's what I want repaired next, right? Or below that 1772, right? So you're going to see above the prior day's high at exhaust, which I covered earlier, right? We still haven't fixed it, except that we add a new level really right here that needs to get fixed, and this needs to get fixed. This has gotten fixed. Okay, see how we just cleaned up that low right there? Now I understand that it went to trend day down, but understand, I'm sitting here going, hey, I've got to take this out over here. Once I take out that 1772, I can start looking for clean areas to find my trade, right? So once I get underneath 1772, notice it's one timing to the downside, right? This ends my one timing to the downside right over here. And now it can push back up. And by the way, that's pretty important. When you start one timing, so see you have one bar, and it can't break the prior bar's low right over here. So see, once you've come back and you've taken out that low over here, now you can start looking for your setup on the rebound for the roll to the downside, which is another concept. Anyways, here's the important part that I want to be left. Whether you're using profile, 1 hourly time frames, use a higher time frame to look for where you want to get long. And even in a situation, I've gone longer than I wanted to because well, it just takes a lot of work to get this down. But even in a situation like with NQ, guys, and here's the adoption as I've been thinking about it, right? What you want to see on NQ, and it has not been able to do it, but what you want to see on NQ is, well, when it's going vertical, there's just nothing you can do. It just doesn't pull back enough for you to grab it. But most of the time, if you look intraday, like when you're down here, so see how this area is a poor high, right? So when you see a high that's a poor high and they clean it up, you get these huge rolls to the downside, right? So this was just underneath the prior day's low, but the area that needed to be cleaned up was right over here. When you look at this chart here, you were going to go, well, not only do I need to get above the high, but I need to clear up these poor highs. So see how you end up with excess over here? And that told you they kind of cleaned it up. That's just where the breakout occurred. But most of the time when we are in some kind of balance, they're going to want to come and clean up. See this? Like you can just see how poor that high was, and they'll want to come and clean it up, and that'll give you the setup to roll to the downside. Again, this and this need to be cleaned up. You get above it, and it kind of runs out of juice and rolls back in. It's just in a trend day up, right? And so what it does is it cleans up smaller areas, like all these 30-minute periods right here that have poor lows. It just cleans up those micro areas. Whereas when we have a robust market where it's on two sides of the market, it'll clean up both sides. All these things are used to go, okay, where are the stops or where are not the stops, right? So like when I look at this chart, if I were looking in this area, I'm going to go, okay, generally poor high, right? There's a little bit of excess there, but not much. So we get above it, it re-auctions the single prints, down it rolls, right? This left all a poor low down here. So see when we came underneath that poor low, and then they reversed it back up, obviously in the overnight session, right? Same thing here. They took out the poor lows, right? Reversed it back up. This left you with a lot of bad highs, particularly this right here. And you can see even when it's trending, even though it's trending, it still comes back and takes out that. Once it takes out those stops, you can still see how it went into balance. So if I'm looking here, right, I'm going to go this, not this, that was good excess, right? I just want to get above this for a prior day's high. And then I'm going to say, ultimately, this is what needs to get cleaned up. And once that gets cleaned up, it then goes into balance. That balance area is valuable. Why? Because it covers, well, not really, I guess. It didn't roll much. It basically covers almost 50 points of range, which is $1,000 a contract, which is why it's important to look into those areas for a good trade. Anyways, my name is Simon. I'm a Trading Perform Coaching. I hope this helped and did not confuse. If it did confuse, just let me know and I'll try to clarify. But what I want to do, it doesn't matter what time frame I am looking at. All right, I want to say that again. It doesn't matter what time frame I am looking at. I'm asking two basic questions, right? I'm asking two basic questions when I am trading. Okay? Where's the stops? Okay? And where's the major support and resistance zones from larger time frames? And then I'm going back, so to remind people in the room, right? Ultimately, once I have those entries or exits, once I have those specific setups, right? I want to go back to this chart and slide this over. Again, I'll use oil as an example here. So let's just go look at oil really quick, right? So if I use my I'm going to duplicate this real quick. And as this loads, all right, I'm going to go look at Friday. So this would be the last piece in kind of quote unquote putting it all together so that I have all the pieces in one place, right? So I'm going to look at Friday over here, right? So I'm going to erase all the lines. And I want two things. First of all, if I'm going to trade, I prefer to trade outside of the value area. This, again, since I want to be address the conservative trader, right? These are the areas I would like to tag at a minimum to trade. So that brings me up to 79.38. I would like to be outside of this area to trade. When I look at this chart, right, the next question I want to ask, is there any place that had a poor low or a poor high that needed to be repaired? It didn't, except this kind of left, this little area right here, kind of left a poor high right through here. And obviously, there's the top of a 30-minute time frame. Now I've got to make a decision. Really, again, it's important. I really wanted to short above 82.38, or I wanted to be long below 79.40. My higher odds is below 78.21 or above 83.44. And I generally want to stay out of this area right here until we exit that location. I want it to attempt below or above the value area. So that's kind of the setup going into Friday, right? So this is chart number 17. I'll slide that over. And then I'm going to hit F5, advanced setting. Let's take this off. Okay, and that's what it looks like. And that was at 75.32. Let me erase all the lines that I have on this chart. And I have these locked, so hold on 1 second here. And let me go back here real quick. 79.40 was Globex low. Apologies. I have these locked from a prior session. Yes, delete all this. Okay, so this is the initial balance, and this is 79.40. So step one, we got below 79.40. Everyone's happy at that point, right? So the next thing that I want, right? So this is on the US session. This is my wave to the high. So this is my low right here. See this? So this is my wave to the low. The wave to the low accomplished closing below on, again, this is a very small time frame, but close below that 79.40, right? So now I've accomplished getting above the wave to the low. This now becomes my support. On the downside, I haven't looked how this worked out, so I don't know if we get a backside test to set us up, but I want it to come back down there. It didn't. Unfortunately, it just took off. Now, my more conservative trader, what they were looking for right? You got the wave to the low. I wanted to close above it, which was right here. And then what I wanted it to do is come back and backside test and give us the setup to the long side. It didn't do that. So let's hold on for a second because I want to tie the pieces together for the members in the room, right? I got below value area low, right? So I can go back and check the other things like, was this an hourly stop out location? This is obviously the low of the US session and only one ticked or a few ticked underneath the low of IB, right? Of the 10-minute IB and the half-hour IB for that matter, right? We just tick underneath it now within that process. So let's erase everything for a second. Within here, what were the setups that we had that could tell us we could push higher? And there was a couple of things. And this is going to go back to Randy, and it's going to go Randy's comments and some of Bill's comments, right? So we all know that if we get this in the algo firing, this no demand bar, followed by this engulfing bar, you have a good chance of getting a trade to the upside. This is still worth right here, 20 cents, but it failed. What were you doing? The whole thing was inside of value, right? So then we traded and closed underneath value, traded back in, and then it comes back and gives you a no demand, no supply bar, right? And an orthodox engulfing little green dot, and that rips it to the upside. Additionally, if you look at where the point of control came in there, point of control came in at the low. That's always increases your odds. You'll notice that when it works really well, those POCs are coming up in the high, and you're getting the rest of the trade put all together for you there. So the point of control came at the low. The next piece was we got this arrow down right at the low. What is this arrow down? This is actually an arrow and a square down, but it comes in at the low or near the low, right? So what that's telling me is, right, so remember I'm out of value. They tried really hard. If I get a point of control above that, right, I can lift. That's the next way that I have of finding the trade. And really what I want is a positive bar, anything but a no supply, no demand bar to close with a point of control above. That's this bar right here, all right? Then I get above the wave to the low, that's right over here. So this is above the wave, this is the wave to the low, excuse me. Once I get above the wave to the low, we push, 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 push. Now see this triangle down? This is somebody going, hey, wait a minute. I want to try to push this thing lower. So what happens? Here's the point of control, right? See when I get the very next bar and it's engulfed, it has the algo fires on top, the point of control is above the bar to the left, and then instant lift. That's what I'm looking for. Like, I actually can't make it any simpler than saying, yeah, that's exactly what I'm looking for, right? Is that continuation up for the algo to fire, right? Now, what's the last piece I'm going to put in there? Very simple. I'm going to go, I would like to sweep through this whole value area, right? And if I sweep through the value area, right, there's two things that I want to do. I want to get all the way up to 82.39 if I can. So that sets up a huge potential from 79.40 to 82.52. I'd like to break the prior high. And then I'd also like to come in here and see if anything, and I know there's something in there that needs to be fixed. And I'm going to say, maybe it's over here. Let's see. Really, this is what needs to get fixed over here with some excess above, 84.88, right? So then if you carry that all the way through to Sunday night, those are your, so the first level you're trying to reach is 82.39, right? That's your other end of the range. That brings you all the way up, well, a little bit past here. So if we drag that all the way through into Sunday evening, have we made it there yet? Let's go look. Oh, there we go, 82.39, and it finds exhaustion, which was, that was the other end of the range for that particular trade. Okay, so I hope that helps. That's how we're trading in the room. We're trying to connect one piece to another piece, right? We're trying to connect a higher time frame to a very small time frame. Again, I haven't been doing a lot of coaching for the public in general, so you'll forgive me. This was a pretty choppy coaching session, but I'll get better at it again as I do more and more of them. And it's that detail that probably 90% of the people have dropped off on now, where you find the amazing opportunities. And it's how you tie in the micro to the macro chart to get those huge swings to get paid on. Anyways, my name is Simon. I'm Trading Perform Coaching. I'm going to bed. See everyone in the morning. Have a good night.
Order filled.